Good morning. I'm Mark Allen with Gaper.io, and it is morning where I am. And great, Michael just joined us, so all
Hello.
and we're coming from all different parts of the world. I'm coming to you live from the San Francisco Bay Area, and I'll let each of you introduce yourself. So, Sean, why don't you tell us a little bit about yourself and where you're coming from?
Yeah, as I was saying, I'm just a guy outside of Toronto that's fallen down the Bitcoin rabbit hole this past year and a half. I've done a little bit in real estate and studied real estate, and part owner of a sign company. But I'm happy to be with you guys today to help hopefully educate your platform on Bitcoin and money and assets and wherever the conversation leads.
Cool. And Theo, why don't you go next?
So great. Hello, everybody. My name is Theo. During the day, I'm a CTO and co-founder of fintech here in London, UK. And, I've been into the NFT and crypto space for the past 2 years, actively, and then for much longer time in a more passive way.
Thank you very much. And Michael, where are you from? And tell us what you do.
Yeah, well, I was just hanging out in, I guess, the wrong Google room by myself, but I enjoyed my company, so that was good. Yeah, welcome everybody. Sorry I'm late. I do. So I do a few things. Right now we're running a private foundation in the wake of the Celsius meltdown, Volt meltdown, all the Chapter 11 proceedings, all the market manipulation since 19 that we can get into later. And doing a startup, decentralized media. We actually released a sort of a mini documentary in the next 3 weeks or so that gets into the reason for its delay and Web 2's walled garden approach to innovation. So that would be real fun to discuss because that takes regulation and it takes the promise of Web 3 and then regulation, the powers that be, and mushes them together in a way that everyone can enjoy.
And your foundation is the Citizen Warrior Foundation, correct?
That's right. That's correct. Thank you.
Michael and I did a podcast together. It was quite interesting.
Oh, Mark. Oh, Mark. Oh, great to see you, man. I'm sorry. I was so caught up being alone in that Google room. It's great to see you.
Yeah, does mine just say you? Or does it have my name? So.
Yeah, no, I just call it.
Yeah, cool. So why don't we start with, just some basics. What do you guys think of how are different cryptos regaining their value now? Because they were, and all of a sudden, boom, and they seem to be coming up a little bit. What do you guys think? What's helping them retain their value? Why don't we start with you, Sean?
Yeah, we've seen a bounce off the lows, it seems, at least the lows for now. But no one really knows at the bottom's in. Anyone that proclaims to know, might be selling you something. I like to separate the Bitcoin price from the Bitcoin ecosystem. I always tell people that, have bought recently in the past year near the highs and compare it to now, it's like everything in the Bitcoin ecosystem is healthier than it was at the all-time high. If you look at the Bitcoin Lightning liquidity, Lightning user development on Lightning, it's just growing exponentially. Adoption on the Bitcoin layer 1 is growing exponentially. The hash rate, which is the security of the network, it's at an all-time high right now. You're seeing nation states adopt Bitcoin. Obviously, El Salvador adopt both as legal tender and a reserve asset in about this time last year, and they recently hosted about 44 countries, country leaders and central bankers to learn about Bitcoin layer 2, which is the layer on top of the Bitcoin first layer that just helps with transaction speed and instant settlement. You're seeing regulatory clarity. Gary Gensler is the head of the SEC. He actually taught a course at MIT, which I took, just talking about Bitcoin, blockchain, smart contracts, all that stuff. But he's come out and made it clear several times that Bitcoin is not a security. Most other cryptocurrencies are a security and will be regulated as such. And Bitcoin will be regulated by the commodities, the CFTC. So just more clarity, which allows institutions to feel more comfortable and allocate into the space. FASB accounting rule, we don't need to get into that, but it just allows companies, institutions, public companies to buy Bitcoin and make it easier from their accounting practices. I'm sure everyone saw the BlackRock news. BlackRock is partnering with Coinbase. Larry Fink, the CEO, he came out and said on their platform had inquiries for a few different topics. One was, ESG investing. That had about 3,000 inquiries. Another one was maybe COVID related. That had about 3,000. And from the institutions, they had 600,000 inquiries about Bitcoin.
Wow.
So no one cares about them.
So just the interest is, yeah.
Mhm.
Probably none, right? But yeah, and then Fidelity. So BlackRock manages about $10 trillion in assets. They're the biggest institutional investor in the world. Fidelity's been around the space for a long time, but recently they announced that they're going to allow people in their 401k to allocate 20% of their retirement fund to Bitcoin, which they manage about $4.5 trillion. And yeah, just the liquidity as a whole is shrinking, right? You have a fixed supply of 21 million, right? By the year 2140, 21 million will be mined. Every time there's these fluctuations in price, the weak hands get squeezed out. They're either leveraged long, they have a short time preference, they haven't educated themselves properly. They get scared when the price dips, and then people that have a longer time preference, they understand what this asset is. They're the ones buying it up, but just the available supply is just shrinking and shrinking. So as demand increases, it's going to move the price more and more. So yeah, just really excited for the ecosystem as a whole. I think it's as healthy as it's ever been. And yeah, Lightning, the development that's happening there. I don't know if you guys follow Jeff Booth. He's probably my favorite character in the space, but he started Ego Death Capital. They've raised 50 to 100 million, and they've they've interviewed about 280 different developers that are wanting to build on Lightning, which is the level 2.
Great.
So just optimistic about the space as a whole, and yeah, that's my take.
Well, cool. Thank you. And obviously, you're a little bit more than just some guy who's interested in Bitcoin. Yeah, that was quite a lot. So,
Bitcoin Max in the show.
yeah. So Michael,
right there.
Yeah,
I love it.
Yeah.
Michael or Theo, do you have anything to add to that? I mean, why do you think that the cryptos are regaining their value, or did he pretty much sum it up?
Theo, please.
Well, that's the thing. I was gonna say, thank you. I was gonna say that, Sean covered a lot of the points, and I agree with him. I'm also a little bit of like a Bitcoin maxi, and I like the idea. Well, you can see that, all the other ecosystem are like following through. One thing that I'll probably add is from the point of view of builders, there's also a lot of movement. I think in a bear market, that's where that tension moves towards, and it goes away from the market as a whole, and it goes into the builder stuff, and you can see interest both from actually Web3 companies and other innovations, but also from big VC funds like Anderson Horowitz launching the biggest crypto only funds, and you see this massive valuations when everywhere else, fintech included, is shrinking, and the crypto market and the startup and the whole ecosystem is building at a speed that it never happened before.
Yep. Very cool. And Michael, anything to add?
Yeah. I'll cap a few things. I mean, Sean and Theo definitely covered the lion's share for sure. But I mean, I will say that Gensler did fork over Ethereum. I think he said that would be a non-security as well. I know he was kind of iffy on it originally. I'm not going to state my opinion on Ethereum, or it's move over to POS, but it is what it is. I know that he does want the FT commodity future CFTC to look over cryptos without inadvertently undercutting the SEC's oversight onto them. I do think that they're looking at a lot of these chains who are ostensibly, at least to the public, decentralized, but are really centralized. 60% of their horsepower, 30% of nodes are on AWS or something like that. And I think what we saw was a flush of the crap. We had a lot of fluff in this space, and it's tough to talk about the crypto market. If you talk about crypto market, you talk about just so many projects, and that we want to separate that. So we have digital assets, right? So we have that now. Let's just call that ETH and Bitcoin. And like I'm a big fan of Bitcoin. And then the rest of it, right? And then the rest of it within emerging tech. Like I love like certain, for example, the Web3 dream is great. Metaverse is interesting. Where's it going to be built? I like these scalable layer 1 solutions that are coming out. I mean, Shardis, for example, that's linear scaling right now. They're building smart contracts on it with Shardium. So, I mean, now is like the time to, I'm not a financial advisor. It's not financial advice, but, I think very rarely, maybe Sean, you can answer this. If a previous peak floor has been broken in a prior cycle for BTC specifically, I'm not sure. I don't think it has, but I could be wrong. So,
sorry, what's the question?
Yeah, so if the Bitcoin for the prior cycle, its peak was broken in the subsequent cycle floor. I don't know if it has, but has it?
The previous peak for Bitcoin, anyways, was 64,000, and it got to 69,000 before it kind of crashed.
You could crashed 24, so then the one before that was 21. Right?
Yeah.
So and then it did breach 21 down to 19 momentarily. I think what we saw was like a huge market inflation happened just rapidly, a rapid drawdown. This is speculation, but I do think there were some layers behind that, pumping liquidity, because institutions were late to the game and they wanted to go buy distressed assets, wanted to get low cost of customer acquisition. They did that through Chapter 11 and Celsius most notably. So yeah, we're going to be keeping our eyes on Celsius, the market as a whole. But yeah, Bitcoin is just so sexy. So we want to pick that up.
Well, you kind of walk right into our next topic, which I was at Bitcoin 2020 in Miami, and I forget what it was at when it started, a conference, but by the time it ended, it had gone down like $4,000, and it kept going down after that. So if it's such a safe investment, and nothing is a safe investment, but you're all bullish on it, what do you think happened? Why did it come down as far as it did? Why don't we start with Theo this time?
Sure. I mean, like from my point of view, it's very much related to like the macroeconomic situation of the world. Like as much as people want to think that it's a standalone and like a different system from everything else, it's always going to like follow what the real world is like. I mean, like there is like some corrections. There are cycles that are going on. I'm not big, like I'm not like a technical analyst or anything like that, but from seeing it for like the past almost like 10 years, you can pretty much spot it also for like a layman like me, and you can see how there's like the cycles, and there's always like the next cycle is even more like bullish, and there's like much more adoption. And I think like adoption, the cycle is gonna like increase tenfold, because it's when it goes down that then it's much easier for like people to get in. So I'm all for the cycles. I think like this is when things can improve and can get like much bigger for like the next wave.
Okay, Michael, your thoughts on why it went down so far so fast?
Well, I guess those two parts. So the rapid drawdown, I think, was coordinated, but that's a speculation, and we're going to dive into that through analytics at a later time. Again, because institutions were late to the game, people were front running them because we kind of knew what was happening before they had regulatory clarity, or they knew what direction it was heading in. But now we have assets, right? So we have Bitcoin and Ethereum. What the big thing is here is as these regulatory agencies figure this out, and again, that statement was a big statement, right? Securities, commodities. Now you're talking about sovereign wealth funds. You're talking about some of the largest capital pools, and you take 1% allocation, within Bitcoin, or split it with Ethereum, and like you're talking about a boom, right, in liquidity, and these guys are holding it. I mean, I'm not disagreeing. I think people should do what they can to purchase with what they have, right? So it doesn't your time horizon. Like if you're looking at this from a speculative standpoint, probably stay away from a volatile market, because are macros at play, and like, you know, look what happened with the COVID dip and the ton of money you could have sold at the bottom, right? I mean, so it's just like, right. So Bitcoin, I mean, I see it as a digital asset, right? So something that I can borrow against. It's a commodity, like something that I'm going to be sitting on. I'm going to put in a tax advantage account, and I'm going to be handing it over to my grandchildren. Why? Because I know it's going to be the best return asset out of any commodity that's out there, right? And then so if I was an institution right now, looking at what would I be looking at, right? If I was a sovereign wealth fund, what I'd be looking at Ethereum, Bitcoin, right? So like, yeah, we're going to wait a couple of years to have, maybe, you don't know, to see like this huge amount of liquidity in 2.75 trillion. And then, but if you're looking at certain projects, what should you be looking at? I mean, Bitcoin, Ethereum. Why? Because they have the most upside opportunity given the institutional interest and sovereign wealth potential. Plus Web3, emerging tech, right? I mean, utility NFTs are going to be very big. Web ID. You know, just interviewed Lisa Picat from Unstoppable. And like I was very bullish on Web3 identity because it crosses all software, right? It crosses all software on-chain, off-chain identity, and it solves the biggest problem that we have in the Web2 walled gardens, which is, you know, when we were launching Decent Media, Facebook just decided that this huge that we had that should be shut down. But all right, excellent. Great. Now in Web3, we just jump over to the next Facebook or whatever, right? Moving all the followers, all the revenues that can be generated from followers and the momentum, and not lose it. So that's a fundamental change in culture and risk management and also valuation of companies and venture capital are certain they are yours in Web3. In Web2, there's subject to the whim of you know, the barrier. So yeah. So, you know, how's the market going to do? Break out the market from like regular, like community-oriented stuff, NFTs, emerging tech, commodities, and just, you know, crypto projects, protocols. We want to break it up.
Very cool. Okay, and Sean, what do you think causes the downfall or the down spiral of crypto?
Just so many things. Like, we're a global, complex economy. I don't know if you guys have read Ray Dalio's book, Changing World Order: Why Nations Rise and Fall. He's suggesting that we're at the end of a long-term debt cycle. He uses 18 different metrics to look at the health of a country, but some of the main ones were what's happening with the money. Is it debasing? What's inflation doing? What's the cost of education doing? What's life expectancy doing? You know, polarization. Do we have strong leadership? And I think there's pretty clear answer to a lot of those, not in our favor. But yeah, we operate on a debt-based money. We have since 1971 when we went on the fiat standard. And our economy requires debt and money creation, low interest rates, issuing bonds. You know, the kids call it printer go burr, QE. It's got a bunch of different names, but more and more we require more and more debt in order to make sure our GDP keeps increasing. And it's that needle of GDP is getting harder and harder to move as technology wants to bring people more for less. We vote with our money more for less all the time. When you buy something on Amazon, you know, when you download the calculator app for free on your phone instead of buying one, technology wants to bring the price of everything down. And our debt-based system can't allow for that. So more and more, as deflation gets stronger through 3D printing, AI, autonomous driving, what else? AGI, renewable energy, all of these things that will eventually converge together over the next 5 to 20 years. All these things are going to be working 24/7, 365 at an exponential rate that human brains have a hard time fathoming. And they'll be working to bring prices of everything down, including real estate. So yeah, what's causing the crash? We have a hugely indebted system across the world, the US, Canada, Europe, Japan, China. All these countries are really hugely in debt. And at the same time, you know, we all printed a whole bunch of money. I think the US printed about 40% of their total currency in circulation ever during 2020 and 2021. So you had a huge influx of money chasing the same amount or less goods because we shut the world economy down. and then everyone was surprised that we had massive inflation. So now you have really high inflation and really high debt, and we're trying to raise interest rates, and therefore the cost of all this debt, and we can't handle that, because if this debt starts to unwind, the contagion around the world, in the US, Canada, it'll just start unwinding, and the amount of money that it'll take, debt creation, will be face melting, and it'll cause a lot of countries in the world to essentially enter a debt spiral and not be able to repay their debt. But yeah, obviously COVID helped this along. The war in Ukraine and rising energy prices helps this along. Energy is the input in every economic activity. For the past 100 years, when the price of energy peaks to, like, say $120 a barrel for crude, it's always followed a recession. But we can't really afford to go into a deep recession because things will unwind. But Michael kind of touched on this, but you had the Terra Luna meltdown. You had the Celsius meltdown. You had Three Arrows Capital meltdown. You have Mt. Gox coming. That's going to be about 150,000 coins hitting the market. Tesla sold their 75% of their Bitcoin. You had the Fed raising interest rates and essentially sucking liquidity out of the market, right? So even if people don't think the US dollar is a strong store of value, when it's being sucked out of the economy, and interest rates are rising, people still have to service their debt and pay their taxes and buy their coffee in US dollars. So there's a huge demand for US dollar, but all these things kind of happening at once. I'm impressed that it held up at 17, 20,000. I think it's 22,000 US right now. But there's a huge force pulling, along with fast money and Wall Street traders. They move a lot of money, and they're kind of associating Bitcoin as a risk-on asset. Kind of, it's been tracking the S&P 500. But as I alluded to before, the liquidity, the available supply is just shrinking and shrinking. I looked up quickly for you guys before this. 65% of Bitcoin hasn't moved in the past year. You can look at that on chain. 70% hasn't moved in the last 6 months, and 85% of Bitcoin hasn't moved in the last 3 months. So all this stuff is happening. People are selling, people are buying, and all the meanwhile, the available supply is just shrinking on a fixed asset. So who knows? But yeah, we'll see. Everyone's watching the Fed right now. Everyone's waiting until the Fed announces that they're going to start to at least pause interest rate hikes, and eventually, more stimulus, and then lower interest rates eventually. And then when that happens, people are going to pile back into risk assets, and a lot of them will probably rip.
Well, interesting that the Fed doesn't seem to be giving us a timeline of when they're going to stop raising interest rates. They've had 2.75 raises in the last 3 months. So, do you guys have any speculation as to when that could happen? When things will settle down? Because it doesn't seem to be stabilizing anytime soon. For a lot of the reasons you gentlemen just said.
Should the Fed? Yeah, I mean, so like they're the market as well.
I think the volatility part about
they're tectonic players. I mean, so take the Fed for example. Sure, I mean it has enormous control over some of the volatility that we've seen, but also there's, like large companies. Again, just as Sean said earlier, I'm surprised it didn't take a bigger dip, because if that many people who were in the know, right, saw how these irresponsible custodial lending platforms, decentralized ones, not decentralized ones, Celsius, how irresponsible the risk management was, so on and so forth, you would have thought they would find it out, but maybe they were smarter than that because they realized the inherent value in Bitcoin, all the fundamentals are up, etc. Right? So if people didn't realize that, if mass adoption wasn't catching on at least relative to that commodity, to that digital asset, that I think we would have seen a much bigger dip, or something like that. Oh my God, it could be taken away. But no, I mean, as you see mass adoption of cold storage, for example, people are going to get more comfortable when you simplify the complexity to be able to store your asset within one of these little devices. But in terms of the macros playing out, I mean, like you have the US dollar the world's reserve currency, now breaking into potential bipolar, taking some of that tripolar market share. So there's so many unknowns that it's really highly speculative, other than to say that the U.S. has to do better relative to energy, do better relative to local regulation, do better relative to local taxation, be quicker to issuing regulatory guidance in emerging tech, because I mean, it's killing the American middle class, and it almost looks like it's being done, quite frankly, on purpose. So we're tracking that, and bet your ass we're going to call out the people making the calls that are causing pain. That's it.
And being in San Francisco, I certainly can relate to that. We won't get too political here. And I'm curious, like, a lot of people I know, like just ordinary, people from where I live and do things with, they don't really understand Bitcoin. How much of that do you think, just the fact that people don't understand the fundamentals of it, has led to the downfall?
I think people like Sean and Theo coming out talking about all you guys talking about it right now, you do it the same way. I'm saying,
yeah,
to be done, and it just needs to break out like whatever, just so, and break into me. Cool, made it.
Mm-hmm.
Popularize, do something outside of it. Sorry, guys, go ahead.
Yeah, and two, it's you have to remember, a lot of us are in the U.S., Canada, North America. We don't necessarily. A lot of people aren't aware of the problem. They don't have a problem to solve. Right? If you're fleeing Ukraine and you want to take your wealth with you, how do you do that with a house? How do you do that with stocks? How do you do that? I mean, you can maybe with gold, it's a little more challenging. What if you were, what if you're under an oppressive government, where they're stealing property and doing all these things, massive current debasement? What if you're in Venezuela with 1,500% inflation, Argentina, Sri Lanka, Lebanon, Turkey? Those people have a problem to solve. Someone that doesn't have a bank, like if you go to bed at night without a bank, you wake up, not a good foundation to your next day. It's hard to build with that. So it's important that, that's kind of the beauty in Bitcoin. It's like the people that don't need it will probably adopt it first, and that will help with the distribution. It's just spreading like wildfire in Africa and South America right now because they have a problem to solve. We don't. We've lived in a comfortable world for the last 75 or however many years, and everything's always going to be okay. And that's just our belief, which grateful for that. But if you have been following the market and the economies and and what's happening with our money, people in North America are starting to get ahead of the curve. And yeah, the biggest challenge for North America is just education, which is why we're all here. And just people being open-minded and learning about it. Even if you don't want to buy it, that's fine, but let's educate people and help them longer journey, because I think everyone will cut Bitcoin. It's just kind of a matter of time and education. So
yeah. And Theo, and three of us here are from North America. You're across the pond. What's the general level of intelligence and knowledge of Bitcoin and the general overall feeling about Bitcoin over there?
So from my point of view, I still live in a bubble. Like London is the bubble of crypto, really. You can see like massive inflation and like attention on it, and same thing like happens to like Web3 and like other parts of the ecosystem. But in terms of like when you look a little bit outside, or even just like on the European level, you see like much less adoption and knowledge. And I'm originally from Italy, so anytime I go back to Italy, you can totally perceive the difference. But when you go to like, let's say, Southeast Asia, it's completely opposite. They're like much more ahead of it. So it doesn't always translate with we need being like that what brings it together. But I do believe that where there is a use case, a real use case that you guys already mentioned, it's much easier for like new technology to pick it up. We see like massive the neobanks and like the fintech like exploded in India, even like bypassing the whole like card system and like normal banking. Like you see like Southeast Asia, and you see like Africa now taking over like crypto and Bitcoin to take over like all the normal system that we currently have in like the Western world. And for me, it's more about the fact that like people don't know, like the lay people don't know about it is not what brings it down, but it's going to be like what is going to bring it up. Once those people like start to see the value and like they get like an easier access to it and like a better user experience, then it will simplify like the mass adoption. Right now is still kind of like a niche tool. Is like kind of like embedded. Well, it's like non-embedded finance. You have to go for you need to look for it. It's kind of like the web before like people had like social media. You had to know what to Google before Google can tell you what to find.
Yeah, agreed. And Sean, interesting thing about what you mentioned about other countries. When I was at Bitcoin 2022 in Miami, there was a panel, and two of the people on the panel surprised me. I never thought of this, but they said, we think of Bitcoin as freedom.
Yeah.
Right? Because of they're oppressed. And
yeah,
if you can get out of that country, or right, and some of them they couldn't.
Yeah.
Right? They had wealth.
Yeah.
Right? They didn't have to bring it with them. And I never thought of it that way, but because we think of it here as like, I got an extra 10,000, I'll buy some Bitcoin and see what happens in 10 years, right? That's how we think of it in North America.
Yeah.
Right? So, I mean, let's talk about the volatility. I mean, because you think it just be by nature cryptos are volatile, or do you think it's more just perception and market forces, or do you think it will be volatile for a while until a certain point and it just starts it reaches a point where that tipping point was like, oh no, this is the real thing? Go ahead, Sean.
Yeah, I when the Bitcoin price dips, it's time to go back and make sure you're well educated and strong in your beliefs, and still be willing to question why it might not work. Sorry, what was the question?
Well, just you could by nature it's volatile, or do you
Volatility.
think?
Yeah.
Right,
Jeff Booth talks about this a lot. It's volatile if you're measuring it by the current system, which is our fiat heavily indebted system, rising interest rates, huge debt, money being sucked out of the economy right now. But again, if you look at the Bitcoin ecosystem, it's increasing and becoming healthier every day. So it's a completely new system. Like it's a big deal. Like it's a 0 to 1 in history where we're moving from money that can be controlled by people, governments, whatever, to something that's just math and code and has aligned incentive structures. So it's been volatile. It's been upward volatile, but by about 150% every year for the last decade. It's going to continue to be volatile, which is nice, because if it wasn't volatile, it would take a long time to get to 10 trillion in market cap, 20 trillion, 100 trillion in market cap. So as Saylor says, volatility is vitality. It's life. And with more volatility, we'll increase adoption, and people are talking about it. And I think it's ultimately a good thing for the space. And it weeds out bad companies and people that own Bitcoin and they're not sound, or they're uneducated. So for long term, I think volatility is a good thing. That's just my opinion.
Yeah.
And if you can't stomach it, you need to have more education, and you need to have a longer time preference of at least 4 years, but ideally a decade or 20 years.
Well, and Theo, what do you think? Do you think it's naturally volatile? And if so, do you think it will ever level off?
I mean, the way I see it, and I believe in Bitcoin from the very beginning as like a currency, and like as a concept. I never hoarded anything. I used like from day one when like Bitcoin was less than $1, as like buying pizzas and whatever. But to me, it's gonna like keep going this way, at least for like the very like short midterm, and only when we hit like very like mass adoption, and it's going to be like on par in the real world and also like in the digital space with like other types of currencies, then you can start looking at like a more at a safer ecosystem. Right now, it's as Sean said, like we need this volatility. It what like brings the entropy into the ecosystem and what help us like move forward. All the innovation happens when like there's like big forces in play. So it's what it's keeping it also alive during like bear periods.
Very point. And Michael, I have a feeling I know your feelings on this. What I'm going to let you do, you're very unique in the Citizen Warrior Foundation. I've looked into your foundation. Why don't you just tell everybody what that's about and how that all plays into this Bitcoin and crypto stuff?
Okay, yeah, sure. So I mean, we had a nonprofit prior, and we then kind of encapsulated into a 501c3 exempt, which are going to be held in trust. So it's going to be like a safe entity from like a lawfare or whatever, right? There's 3 exempt purposes, which is education, community organization, relationship building, and the third one is research and development, goods and services. All of them have to do with emergent tech relative to decreasing meaningless suffering, right? So that's the general check. Why did I do this? So I used to work in life science as a CEO and chair of a multinational. I had a couple hundred employees around the world, dealt a lot of communist countries, and I got to see the fallout of that, how the people love that, right? They absolutely loved it. And then more free countries, like Colombia, for example, where they were thriving and there's major metropolitan areas are popping up. And now you have these kids getting into coding and developing and actually like catching up with the Americans almost, to some extent. And then, all throughout Latin America, you see that I saw that boom start to happen. And then I saw all the monies that were going overseas relevant to like foreign disaster relief, econ dev. And I know that with the healthy margin for an NGO, 50% roughly on every dollar. So that's 50 cents per dollar in US aid, US GDP terms, 1% is allocated towards US aid, right? 50 cents on every dollar being received by the intended recipient. What does that mean? We can help 2 times as many people, or we can cut the tax burden in half. Now, what would solve that? Well, I don't know, the taxpayer-funded programs onto the blockchain, right? Make it a little bit more transparent and have longitudinal access to where monies went as to what the ultimate effect was. I mean, I was on the ground, well, not on the ground, but I was intimate with the Haiti earthquake and the disaster relief. And if that didn't wake everybody up into the BS of the majority of these NGOs and nonprofits and 501c3s, and that it's nonsense. It's nonsense to take money from the people that people worked their ass off, that gave to the government, that was way too much to begin with, to go to already wealthy institutions, not to pay then taxes on it. That's where the majority of it goes. And yes, emergent tech can check this reality. How did that happen? Incrementally small over time. Citizen Warrior Foundation was born in part to make sure that happens within the next couple of decades.
Yeah, thank you. And I know you have something coming out in late September. What's the date of that?
Yeah. Also, we're doing like a warrior cast, so we're talking to people from different domains, like top level intelligence, law enforcement, and then also like emerging tech and stuff like that. And then just talking about the long run on the institutions. So that's essentially like this quote is kind of like a Mao cultural revolution thing that's sort of been breeding here for a while. Everyone talks about, everyone knows, but no one talks about. So we'll talk about it just for a second. But no, it's we're launching the first step, which is kind of like hinting towards this is what we're going to talk about, because we want to bring culture into crypto, and we want to take crypto out of the crypto sphere into the main, right? So we want to have this this type of thing so that people understand also the responsibility in the crypto sphere. Don't screw people over, don't lack integrity, don't not know quality controllers, don't not know how to risk manage. I mean, these things are essential. If we don't police each other voluntarily, then we're going to get crushed, right? Eventually, someone's going to want to police us, and they're going to do so, and it's going to suck for all of us. So we better do it for each other before someone else steps in, right? Yep. So that's a part. And another part is essentially just, all these institutions that people are losing faith in, which is why everyone is in the know, at least, is driving into Bitcoin. So at least they know that, it's here. You can't confiscate the 24-word seed phrase, right? That's tough. Maybe some torture. But aside from that, it's yours. It's yours, So anyway, a couple weeks. Out there, it'll be all over the place. This huge content distribution network, and you can find it all through citizenwarrior.foundation and Decent Media.
Yeah. I would just encourage people to go to citizenwarrior.com right around October 1st would probably be safe, right?
Just work so much. Yeah, I appreciate that.
Yeah, because I did a podcast with Mike. I was quite impressed with his organization. So if you look at the four of us on this panel today, three of you have dark hair and one of us has gray hair. So
I have zero
my
hair.
question to you would be, you got dark beard. So do you consider crypto in general to be a short term? I mean, it's obviously a long term, but you also consider it to be a short term game? Because that's more my look at the world right now. What do you think? Do you think it's a good short term game?
No.
No? Might Sean say no?
No. If your time preference is to trade it or to own it for a year or 3 months or whatever, I'd say no. You should probably stay away from it. Yeah, it's for the longer time preference. And if your time preference is shorter and there's fluctuation, you're going to sell and probably lose money.
Okay. Theo, what's your thought on that?
From a purely financial point, I agree. Like, it's long term, it makes sense. It's historical, or as long as we have data. But from like a builder point of view, I see it as like super bullish on the short term. I think like right now is the best moment to start building things, because by the time you start doing it, you are ahead of the curve. And I'm more into like the building than like the investing stuff. So I can assure you that like not that many people looks at it this way. They attach it always like the financial value into it. But when you look from like a purely like building and like getting ahead of the curve, it has like massive value in like the short and medium term.
Cool. And Michael, what's your thoughts? Short term or not?
Well, yeah. Well, I mean, so it depends if you mean like speculating, technical analysis with, let's say, ish coins or whatever, community-based coins in the market. I mean, yeah, I mean, just taking a lot of risk, and a lot of people have let it stand and they're going to dump. It's unnecessary risk. What would I do instead? I mean, you can still invest. So, I mean, you have a lot of these companies, if you're in VC right now, are doing exactly what Theo's talking about, right? They're building the next wave that's going to perhaps, like, let's say, have consumer protection protocols in something that would be like central, that can even be used within a centralized app, right? Because sometimes people like these centralized interfaces or whatever. If that has to be the case, okay, fine. But the idea is that, I mean, these guys are now, I mean, if you wait till the bull market, right, you could be paying a premium. And I know you know this, so like they think they got a little bit more leverage during a bear market, so you got to push back, maybe not let go too much of that equity. But yeah, I mean, look at if I was going to invest, I wouldn't just dump money into speculative coins. I DCA into BTC if it's below 21, like you bet I do. But outside of that, because I already bought my domain on Web3, is I'm looking at the company, right, and I'm looking at the ownership, right, the ownership structure. I'm looking at their advisors, and I'm looking if they're delivering, right? Because people talk all day, but the ones who deliver, and that's gold. That's gold. You got to be able to wait it out a couple of years. Yeah.
Okay. So to finish up with, I'm just going to ask you your thoughts on compare crypto, NFT, all of those things to your standard investments, stocks, bonds, real estate, things like that. What are the similarities and what are the differences in your opinion? So Sean, why don't we start with you?
Okay. Well, I'd probably point people to someone like Greg Foss or whatever to talk about the bond market. What is a bond? It's a contract to be repaid in the future with devalued money, essentially. So why someone would want to hold bonds for the long term is beyond me. You're guaranteed to lose money in a debt-based system with high inflation. Like real rates are, if inflation is 8.5 and interest rates are 3.5, you can do the math. You're negative 4, 5, 6%. Real estate, I've loved real estate for a long time. That's how I got my start in terms of just wealth building for my family. I've listened to 1,000 podcasts on it, and you learn how you can build wealth through real estate. But if you look at real estate as an investment with like a longer time preference of 5-10 years, you purchase a rental property with tax money. The income that comes through is taxed. You pay property tax. When you sell it, you pay capital gains tax. And right now, I'm trying to sell my rental property right now, and it's like I don't even own it. Someone wanted to buy it and wanted to move into one of the units, and I've been waiting for a court hearing date for about 8 months now. So that deal's fallen through, and I don't see that getting better. No one is going to want to stand up for the landlord, right? The evil landlord, as inflation keeps running hot and the wealth gap keeps dividing, and people are struggling to get by. No one's going to come save the landlord. So I'm happy to get ahead of the curve. I think real estate's probably going to do well for the next 5 years or whatever. But it's just not something. I'd rather put my monetary energy and my own personal energy into a network that I believe in, that I think will help make the world a better place. And should, if it does what it should yield higher returns than real estate. But I've always been a fan of real estate. Stocks, I'm no expert here, but the valuations are just way out of whack. Price to earnings ratios, everything is massively overvalued. I think in 2021, more money came into the stock market than the previous 17 years combined, because you had 40% of the money supply increase, and then money is not a store of value anymore. So everything but money becomes monetized, right? Stocks, real estate, crypto, whatever. Anything but dollars is what's happening, right? So now money's being sucked out, so the value of dollars is going up. But once that reverses, then everything will be fleeing for a store of value, something that's hard to get. So real estate's hard to get because it takes a long time for cities and countries to build more of a supply. I don't know if someone wants to touch on gold, but gold's been around for 5,000 years. Throughout history, it's been seized from people. It happened in the U.S. and the Bretton Woods, right? People were going to be sent to jail or heavily fined if they didn't turn their gold over. But yeah, gold is just it's slow, it's clunky, it's hard to exchange. I don't know where I would go to buy physical gold right now. I don't think any millennials are going to be buying gold anytime soon. It's hard to divide. It's hard to settle. It requires trust. Where do you store it? Do you give it to a third party and incur that counterparty risk for this, supposed bear asset? So gold's just not for me. But if someone's wealthy, and they want to diversify with Bitcoin, silver, gold, real estate, whatever makes you sleep well at night. And ultimately, you don't need to be all in on Bitcoin, right? Like if Bitcoin does what it should, if you have a 20, 30-year time preference, you're going to see in today's dollars, 300, 400, 500x. So you don't need to be allocated, 100% or 50%. Maybe if you're young and you don't own anything, you want to be 50%, whatever. But if you're older and, you're retiring and, you're 60, 65 and you just want to maintain your purchasing power, you can allocate, 1 to 5% and still be protected from, rapid inflation and asset inflation and all sorts of different types of inflation. But still sleep well at night and not be all in if for whatever reason Bitcoin were to fail. So that's just my take.
Well, thank you. And Theo, what do you think, especially like from the European standpoint? Because we're the default currency of the world. Britain, I think at one time was, if I'm not mistaken.
Yeah, it's been a while, I think.
Yeah.
I look, everything that Sean said. I agree with everything, and I think he has like a much better understanding of the market and the different tools than myself. Again, I want to bring like my point of view, both from like Europe, but also like as a builder, and the way like Europe has always been like more risk averse than like US has always been like more careful. It was always trying to like make sure that there's enough, then like instead of leveraging and like speculating, and then you can see that in like all the different markets, from like the feds to down to like VC and like startups, and same thing you can see it also like in the crypto market, how it's approached over here. From a purely builder point of view, I see it again as an opportunity. I also think that like it's a switch of paradigm. If you look at like the major like crypto innovators and companies, not the big ones that are like, taking a slice of it, but like the newcomers. You look at like at a switch of the usual paradigm, where it's like, big money comes in as VC or like institution, invest into company, and then like company like returns investments and interest. You look at like crypto, like they're trying to like build that wall themselves, and then like approach institutional money to attach it. I think like, from like a starting point of view, there is a difference, and there is like a much better projection if you want to do something the way it was like, the .NET years ago. I imagine like something else is happening here, where it's not just information, but it's also like financial power that has now been digitized.
Mm-hmm. And Michael, we'll take it to you now. What do you think?
Well, for bonds, treasuries, I mean, so I'm showing them that on that. Securities, I mean, just ridiculous, obviously. I mean, I would never enter the market at this point, and especially given tech and how it's going to be transformed in just years, I'm sure, come the next cycle. I wouldn't touch it. When it comes to real estate, I think it's a great investment. I think BTC will, of course, out-return real estate, but I also think the jurisdiction is essential. And essentially speaking about taxation, property tax, such like that. I mean, you can buy outside the U.S. You can form entities outside the U.S., right? I mean, there are various investment vehicles that you can use to mitigate your tax liability, of course. And also, you want to be in a jurisdiction that is likely to confiscate. That what you own, you're not essentially leasing from the ground that is under the place that all your income tax goes to anyway, but apparently now it's not yours. So like what I would do if I was a millennial is I'd probably buy like a 5 by 5 acre plot, like, out somewhere in the country, outside maybe near an international airport, 2 hours away from a major capital hub, by Cambridge, outside the Bay Area, New York City, maybe Miami. Miami's coming up, I hear, right? And that is your home, right? And establish yourself there. Make sure that you can survive, right? Because survival is a pretty important thing. Because we've been in abundance for 3 years. We forget survival is the thing. Yeah, that's the thing to invest in. So invest in your own survival. And certainly Bitcoin is sovereignty. It is freedom. And so I DCA in if it's up or down. I don't really give a crap. But I don't sell Bitcoin. But it is stolen from me from the Celsius network. But aside from that, I don't sell Bitcoin. So it's like I think that Bitcoin is great. I don't think the horizon is 20 years. I think you're going to see returns every few years. And I think that it being regulated now as a commodity more and more is going to introduce sovereign wealth funds to start deploying capital there. And we're going to see a boom, or just, the supply almost go down zero on exchanges, and eventually the price is just going to go haywire. That's my thought.
Well, thank you. And thank you, gentlemen. We're up on the hour now. This has been fascinating talking to all you. Obviously you're all bullish on Bitcoin and cryptos in general. And I think maybe next time we could do a webinar on the metaverse and Web3. How's that sound?
That sounds fine.
I think Web3 is cool. Could be interesting. Yeah,
that could be interesting. Right? Well, gentlemen, have a great week, and thank you very much for your time today.
Thank you, Mark. Thanks for having us.
Thanks a lot, Mark.
Thank you, guys. Thank you, Mark. Cheers.
Yeah, Sean, Theo, Mark. Thanks a lot, guys.
Have a good one. Bye.
Cheers.
Cheers.
Ooh, I gotta be. Mark, see you later.